you are probably the most founder-centric investor I've had sitting across from me.
So I saw kind of Africa for 2 years with Jumia. I was in South Asia between Pakistan, Bangladesh, Myanmar, Sri Lanka, Nepal with Daraz. And then with the last startup with Smilenio, I kind of experienced the Middle East. So it was between UAE and Saudi. So I had offices in both Riyadh and Dubai. And after that experience, I kind of fell in love with the region. And I said, I think there's no better place to actually build in the Middle East right now. When we look at, for example, here in the region, like when you start a company and you look at the early stage institutional investors, these investors would invest only if you have a team, you have validated your idea, and most of the cases you have traction. To reach that point, even if it's early stage sounds good, you need 6 months, maybe even 12 to reach that. And
maybe
I think
even more.
Maybe even more. And,
Yeah.
and I think that's kind of where Antler kind of really closes a big gap. We look for individuals that want to start companies. We select out of all the applications the best 80, and we put them in a 10-week program. And in this 10-week program, it's an in-person program, we do the matchmaking that you were talking about. And the most successful founders that we find at the end are the ones that really, they know all the 79 after 3 days.
This is like dating for building a business empire.
We normally don't invest in sole founders because we just don't believe in the concept. I mean, if you look around how many unicorns exist that come from sole founders, you find almost none. When you're a team that comes together, you talk about all the exciting things and the vision and how you want to change the world.
Yeah.
But have you talked about how many hours you want to spend per week, and how do you think about vacation, and when do you actually want to exit your company? I think the teams that we see that work very well, obviously are the teams that
Welcome to Lucidity Insights, the Perfect Pitch. And I have someone very special with me today, Jonathan Doerr. Jonathan, it's really, really lovely to have you. Jonathan is the partner at Antler, which is a pretty exciting, dare I say, newish venture capital, so-called venture capital. I would consider it more of a incubator / founder matchmaking service. Mm-hmm. And I think that's actually quite exciting because that's an area that most founders, I mean, that's what business schools are for, right? Globally, is people go to business schools. I know at Stanford, people go there to go find their co-founders. And basically, you guys are creating a playground to do that, and kind of giving it a bit of a Y Combinator flair where people are coming in, getting an intensive experience with you so you can evaluate them and watch them in action and basically be the first check. So I'm fascinated to talk about this with you, but I'm also fascinated because you are probably the most founder-centric investor I've had sitting across from me. I'm sure some of the other investors would might disagree or would want that title, but I think it's true because you started your investor time, your career path, just over a year and a half ago.
That's correct. With
Antler. So let's start there. Let's start a little bit with that, and feel free, like you have so much expertise as an entrepreneur with Jumia and Daraz. I want this to be a super exciting conversation where founders and wannabe founders come and say, wow, there's so much here to learn from both the investor perspective, but also your, 15 plus years as an entrepreneur.
Mm-hmm. Okay, cool.
Yeah.
Happy, and thanks for having me again. I'm excited.
Yeah, absolutely. So let's start with why actually you decided, Jonathan, to go to Antler and that VC career move. Because, if you can paint a picture for us, you had many, many years of working for rocket internet startups and then selling them or doing, fantastically in them and then trying on your own. And then this move to the investment side. Tell me a little bit about that transition.
Yeah. So, I was, as you mentioned, at Rocket, was there at Jumia and Daraz. Jumia IPO'd at the New York Stock Exchange in 2019. Daraz, we exited in 2018 to Alibaba, worked a little bit with Alibaba. Then, as you mentioned, built a business from scratch without rocket here in the Middle East. Smalneo exited that company to an Indian company. And so I saw kind of Africa for 2 years with Jumia. I was in South Asia between Pakistan, Bangladesh, Myanmar, Sri Lanka, Nepal with Daraz. And then with the last startup with Smalneo, I kind of experienced the Middle East. So it was between UAE and Saudi. So I had offices in both Riyadh and Dubai. And after that experience, I kind of fell in love with the region. And I said, I think there's no better place to actually build in the Middle East right now.
Okay, well, we're going to have to just dig into that for a second. So that's a big thing. And I notice you are an emerging market entrepreneur, which I think is very different from a developed market. I don't even think we can say that these days because there isn't like this definition of like less developed or undeveloped and developed. But definitely emerging market.
Yeah.
I know I've been in love with emerging markets for the last 15 years, traveling to many of the markets you've said. What is it about emerging markets that make you tick?
Yeah.
And back up that statement you just made about there's no better place to build a business than here in the Middle East.
Yeah. So on the first part of the question, so I remember, I come from Germany originally. I did my PhD there, worked a little bit in the corporate world. Also had actually already a small startup, raised actually my first $25,000 in 2012 or something like that with Plug and Play. And then the rocket offer came, and I remember very well that I had no plan where specifically to go. And I met Oliver Zamber, and he offered me to become one of the managing directors in Jumia, Nigeria.
And how old were you then?
This was 11 years ago, so I was like 31 at that time. And
never been to Africa?
I've been to Africa. I've been to Kenya and South Africa at that time, but never to West Africa. So. And I remember someone telling me before, like, if you go, there's like two options. You either way are completely like, scared, or you don't know where to go, and you feel like not really happy, or your energy will kind of become 10x. And I think for me, the second happened. And what was it really was like, I remember it was like 2-3 days only into the job. And I remember I arrived there in Nigeria, and the conditions, especially with Jumia at that time, was not easy. Worked there out of a warehouse, and things were very different, obviously, than I was used to from Germany. But after 3 days, I felt this energy that I think developing countries have, that energy of change, that energy of everyone wants to progress, wants to move to the next level. And I think that's something that spoke very deeply to me. And I thought when I moved to Nigeria that I might come back after 1.5 or 2 years, and then maybe we'll build a company in Germany. And I never came back, actually, because I think that energy of developing countries really caught me from day one.
And then you actually moved to Pakistan to be the co-CEO and co-founder of Daraz, another rocket internet company. Talk to me about the different energies of even these different emerging markets. I mean, Nigeria is huge, if not. I mean, it's going through some challenges right now, but top three, definitely economy in all of Africa. I think the top three markets, Egypt, South Africa, and Nigeria, more than 50% of Africa's entire GDP comes from these three countries. Huge population. Pakistan, very similar. They're going through some currency challenges now as well. And then also your experience here in the Middle East, which is a very different type of, emerging market. How would you contrast these, and what did you get from each sort of different market?
Yeah. So when I moved kind of from Nigeria to Pakistan, I was with Daraz. I was spent 80% between Pakistan and Bangladesh. Both countries very exciting, and there is a lot of similarities. There's also a few differences, but obviously at the end, all of these three countries, for example, we were also in Sri Lanka and Nepal and Myanmar, but these three countries, for example, huge population, and there's just so much to do. And I think that's what I find always very exciting, that since kind of mobile internet and everything, there's a bit of a leapfrog in development. So that means when we did, for example, e-commerce, if it's in Africa or it's in South Asia, when you think about e-commerce in the Western world, like US or Europe, you always have you went from small stores to maybe brick and mortar, more malls and whatever, and then there was internet. And when you think about Pakistan or Bangladesh or Nigeria, you have now access to products as a consumer that you never had before. You have like a choice of millions of products that you never had before. So it's not only that online kind of e-commerce aspect, it's also that you have now way more access. So I think that was just fascinating. You're in these countries where you can do so much and you make a real change. I think that was also, that excited me. And similar in the Middle East, there's also obviously, when we look at the countries here, very different development kind of stages, but I also believe there's still a lot to do. And then obviously the way that the governments are preparing right now their own countries in changing the way things are, like the economy, etc. And obviously how the UAE, when you think about where we are here today, where the UAE was only a few decades ago, also the big change that we see now in Saudi Arabia. So that was kind of, there was again few similarities. You can do a lot. You can change a lot. You don't need to develop some random app to excite some people. You can actually do like fundamental changes. And I think that's what always excited me. And I think the combination in the Middle East, where I said it's the best place to build, is really you have somehow developing country vibe and still a lot to do. But on the other side, you have obviously there's a lot of capital, and there's what is way more important than actually the capital is the vision that the countries have on developing their own countries. And I think that's a perfect combination to actually build. And that's why I said I want to stay and do more than just one company. And with Antler, I had the chance to invest in more companies and be part of more startups, maybe.
Yeah, interesting. Yeah, I've heard that a lot, that what you get here is, first world infrastructure, first world talent as well in many cases, even though we're developing the depth maybe of that, AI and more of that tech development teams and capabilities here, but it's definitely developing quickly. The capital is here. There's huge vision from the government of like, we will become the next digital capital economy of the world. We're not going to miss out on the next, groups of Facebooks and Googles. We're going to make sure one of our unicorns is playing in that field. And yet it has that fast growth focus that you don't get in Europe. You even talk to investment bankers in Europe and Canada, where I'm from, and in the US. It's more about managing assets and mitigating risk, and it just doesn't grow at the rate that things grow in emerging markets in Asia, continental Asia, I would say. And Africa, very similarly, but it has slightly this different dynamic of some of the infrastructure is not there. There's a lot of pain points for entrepreneurs, but those ones that crack it seem to crack it really well and set themselves apart. I'm curious for you. So you had these both of these experiences. Jumia's in e-commerce in Nigeria, Doerr's e-commerce in Pakistan that you sold, as you said, to Alibaba, and then your own startup here in Dubai and Riyadh called Smileo, which was like retainers or
aligning the teeth, for
teeth aligners, direct to consumer. All of these businesses are sort of e-commerce, direct to consumer businesses, which makes sense for the time that you were an entrepreneur. But now you must be seeing a whole world that's really more focused on, B2B SaaS or even B2B background procurement systems or all sorts of logistics, transport. I mean, some of that stuff I assume has an overlap. But yeah, how do you feel that these experiences support you in this investor role that you're in now at Antler? And do you feel like that consumer-centric lens that you have is missing that other lens of being, a little bit more maybe SaaS related or more back I
office? Think when we look at the current environment, what I find very interesting, it brings me a little bit back to when I was at school actually. So end of the 90s, I started being on the internet as everyone else that were at that time able to go on the internet. And I was absolutely blown away already that I can reach so easily from literally my children's room. I can reach the whole world. So I started creating websites actually when I was still in school, and actually financed my studies by creating websites at that time.
You were doing this when you were in high school?
Exactly, yeah. And then later university. So I created websites, small websites to make some money to finance my studies.
For the local dentist or something.
Exactly, yeah. And if there was like a tax attorney or like a lawyer friend from my father, then I asked him,
such a brilliant. There are entire businesses and agencies now that still do that. You know, you're ahead of the curve.
And literally at that time, there was about like, oh, I don't have a website, I need a website. So that was that time. So, and that time reminds me very much what we obviously see with AI today. I believe strongly that AI is obviously, it's even bigger than the internet. But when we think about how the internet changed the whole world, and we all maybe believe, at least I believe, that AI has an even bigger impact on the whole world, this is the time we're in right now. So there is, again, no better time to build a business. And I think that's what I see. That's what I see also with our startup founders. So when we look at our startups that we invested in, so for example, the Antler fund that I'm heading, we have invested in 22 companies already in the last 1 year. I think there's none that doesn't use somehow AI, right? And I think that's obviously one of the new things that is happening, where companies are just completely changing industries. But as you said, obviously, there is also a bit of a shift. So it's not only, let's go there and let's do e-commerce. Like this time is over, right? Like these, I think, basic things are available, especially here in the region, they're all available.
Yeah.
So now it's like fine tuning. But obviously with AI, things are, again, getting a complete new twist, which is exciting.
Yeah. And I'm thinking back to all of these amazing success stories that you've been part of. I mean, caveat that with an asterisk next to Jumia, post-IPO. But how much did Jumia raise? Did Jumia raise funding while you were there in Nigeria?
Yes. So Jumia was at that time already in 12, 13 countries.
Okay.
Again, originally founded by Rocket Internet.
Yeah.
And then there was different kind of people that came on board. They raised money at that time, very early, before I came, actually, from MTN, Millicom, big telcos in Africa. And then obviously while we were operating, money was raised, which is normally at that time with the help of Rocket Internet, which was still the main shareholder at that time.
Yeah, I always wonder with rocket companies, because obviously Rocket has a name for itself. It kind of, it kind of comes as a package deal. It's not really fundraising for a single startup. It's kind of fundraising for the whole machine. So I guess my question is, did you get exposure to the fundraising process while you were either at Jumia and Daraz? Or was your first real instance when you started your own startup?
At Jumia, I wasn't involved at all. At Daraz, I literally just joined when we closed our last round.
Okay.
So I was like part semi-involved.
Okay.
And then actually we moved already to the acquisition of Alibaba. So I was in the acquisition phase.
Okay.
So the real fundraising experience for me. And also it was very different when you raise for like a Daraz or Jumia at that time versus like your own company that you started in your living room.
Right.
So that was literally then my first hands-on experience, where I would say I needed to pitch as much as I can. Yeah.
Okay. So, well, let's start there. So I'm thinking back and kind of putting you in this place. You've started this, retainer or teeth alignment direct to consumer business in your living room, as you said, in the region. And you're going out fundraising, but I'm looking at you going, wow, this guy has had experience at Jumia. This guy has had experience at Daraz. So you kind of had a real leg up from the experience that you garnered from these businesses. How did you go about your fundraising, especially because you were new to Dubai, right?
Yeah.
You raised the funds here, I'm assuming.
Mainly outside, funny enough.
Really?
Yeah.
Okay, so were they people that you already knew, or did you start from scratch?
So I did something with Smile New, which is a little bit like what Rocket did. So I looked kind of across the world and like what works and what could work in a region. And I got in contact with an investor that invested in a very similar business that I created with Smile New that existed already in Southeast Asia. And I got in contact with him and he said, why don't we do this together for the Middle East? And he had already contacts with a few investors, and that's how kind of all things came together. So I was very lucky that I had kind of that initial angel that helped me to say, okay, I actually, first of all, have invested in a similar business. Plus, he had some contacts. And then obviously I added some people that I knew from back in the days. But it was very new for me. And I raised in total around $3 million, $2 million in the seed, and I had a bridge round of $1 million. It was Kingsway Capital and FJ Labs were the big VCs.
Wow.
And then a few angels on the cap table. So the typical kind of setup, yeah.
It sounded like there was a little bit of a red carpet rolled out for you for that in terms of having the connections, having someone who already had a business plan that I would assume was working in Southeast Asia.
Yeah, so I wouldn't call it a red carpet. I think I had too many sleepless nights for a red carpet, but there was definitely obviously contacts that helped.
Yeah.
At the end, the fundraising I needed to do myself. I think what I underestimated at that time that I saw later that actually, that my background that I had already with Rocket helped me actually quite a lot. That a lot of investors say, okay, the guy built 2 businesses, he exited, or IPO came after I left, but there was exits involved, so he knows what he's doing. So for me, it was, I wouldn't say red carpet, but it was easier than most of the fundraising journeys.
Yeah.
And I underestimated how much my experience, now I understand that world, I think definitely way better, but how much my experience actually being a third-time founder at that time actually helped me then to get the yeses from the ones that invested at the end.
100%. Even like a second-time founder is just a huge leg up. So fascinating. And so with that, what, like, when you think back on this journey and then you becoming this entrepreneur, and then I know you sold that one as well, just as you entered into Antler, what advice do you have for these entrepreneurs out there? Maybe they've built small businesses here or there, but most of them are first-time founders in terms of trying to raise capital.
Yeah.
And also wearing your hat at Antler, because what's super fascinating about your model is that you're not actually investing in an idea, you're investing in the people.
Yeah.
And so that is the ultimate question when you're talking about pre-seed rounds, even seed rounds, even to some extent. I mean, Series A, you have to look at the business model. Is it scalable? Does the idea have a unicorn potential?
Yeah.
But at the end of the day, you could have a unicorn potential idea and a terrible founder, and every investor I've ever spoken to says, no, that's not gonna happen. That's game over. So then it comes back to validating this idea of yours and Antler's, that you create a matchmaking service or some kind of playground and a sandbox where all these founders come together. I know you've been going through these cohorts. You said you've done 2 so far, that you've interviewed these people. What is it that you're looking for in these interviews? Because in some respects, I imagine the questions are quite similar to the first time founders get asked when they're trying to raise capital. Yeah.
So the first part on the question, when we look at, for example, here in the region, like when you start a company and you look at the early stage institutional investors, these investors would invest only if you have a team, you have validated your idea, and most of the cases you have traction. To reach that point, even if it's early stage sounds good, you need 6 months, maybe even 12 to reach that.
And maybe I think even more.
Maybe even more. And I think that's kind of where Antler kind of really closes a big gap. So we're a global company. We're actually the most active early stage investor worldwide, according to PitchBook. And kind of the MENAP fund that I'm heading is a $60 million fund that is for MENAP, so literally from Morocco to Pakistan. So when you think about the stages, and it's like, so what do founders do before that first check that needs a team, that needs a validated idea and traction? Some founders are lucky and they kind of have maybe a network where they find their co-founders. But there are some founders who don't have the access. And then when you think about, even if you have a good network, you might speak with, 5 people, 10 people, but they all need to have the following thing. You need to have complementary skill set, an aligned vision. And what sometimes people underestimate, you also need to all be ready at the same time that you want to start today. Some people say, yeah, maybe I'm a good fit, but currently I'm doing X, Y, Z, and I want to do this for 1 or 2 more years. So really finding that co-founder and then building that first is something where you have not really a lot of support. And that's kind of where Antler comes in. So what do? Is we look for individuals that want to start companies. These can be people that have built businesses before, serial entrepreneurs. These can be people that have never built businesses before. These are sometimes people with ideas and sometimes even people without ideas. And what we do is we select out of all the applications the best 80, and we put them in a 10-week program. And in this 10-week program, it's an in-person program. We do the matchmaking that you were talking about. They do this themselves at the end, so they talk with each other. We give them tools, so we help them to meet, to talk, to look for the right things. At the end, obviously, you need to work for a long time with each other, and you need to. It's not like the coffee chat that will help you to find the perfect match. So that's where we come in. So we have regular, like normally in the Middle East, we have around 14,000 applications per year, and we do 2 cohorts, so 2 times 80 people.
And when are they?
So we do, the next one is actually in Riyadh starting in October, and then we do Dubai again, I guess, next year. Maybe we'll add another cohort at some point because we actually have a lot of applications here in the region.
Interesting.
And yeah, so the process is actually quite... how can I say? It's a quite intense process. Like the first, like the selection of the 80 people.
Yeah,
it's literally a 3 months. We interview over 1,000 people in the 3 months to really find these perfect 80 people.
How many partners do you have at Antler here?
We're 2 partners here,
and then you two do the 1,000 interviews.
No, we have a team of total of 12.
Okay.
So the team, we actually added now like an AI interview, which helps us a lot. It's amazing.
I had that at my old firm. Actually, we built it. It was when did we build it? Probably about 7-8 years ago now. So it was relatively like we were new, but we were spending so much time as partners at a strategy consulting firm interviewing people that we looked at it and went, those are lots of billable hours. And we basically built this video system online where they would be asked a question and they would have to record it, and there would be a little bit of a chat, but it's not the chatbots you find now. But now that I think about it, I go, wow, we were really ahead of our time.
Amazing. So we had, for example, for the last cohort here in Dubai, both me and my partner, we did both individually 180 interviews.
Wow.
And then obviously the team did more for these 80 people at the end. So the AI interview that we're using is actually a WhatsApp chat, but instead of typing, you actually do voice recording. So we literally ask questions and you do voice recording.
Wow.
And the questions are already generated literally during the interview. So it's not like standard questions even.
Yeah.
It's a question that is based on your answers. So it's very nice. It helps us for that pre-selection. But obviously then we have the team that interviews, and then obviously the partners interview at the end. So we put a lot of energy in this process actually to find these perfect 80. We always try to balance between 40% tech, 30% domain expertise, and then 30% kind of generalist to have a perfect mix of people in these 80 that go with us through the residency.
Okay, let's start dissecting here. So your last cohort, your last 2, you had 80 in each. How many of those, like a typical founding team, what are we looking at that you're finding? Is it just 2? Is it 5?
To be exact, it's 2.3.
Is it?
It's a 2.3. So we have some 3 founder teams.
So it's predominantly 2, but sometimes it's 3.
Yes.
And when you see the 2, because you've mentioned 3 different profiles here, what's the most in demand? You know, like in Silicon Valley, it's definitely, like at least from the GSB perspective, you're like the general business person, right? You are hungry for that tech guy, the guy that has specifically can build you that software, that technology that you need to have a cut above the rest. What is it here in Dubai?
Yeah, I think it's very similar. That's why we also select 40% tech people, because at the end we invest in tech businesses, and we obviously want that there is also a tech co-founder. Funny enough is that, like, obviously, as you mentioned, we have these generalist business people that say, okay, I need a tech founder, right? You hear this already in the interview. What we always say is it's very important is that when you come into the residency and you meet these other 79, it's very important that you talk with everyone. If they have exactly the same background as you, or if they're tech, or if they're domain expert, you need to talk with everyone. And the most successful founders that we find at the end are the ones that really, they know all the 79 after 3 days. And they really took the time to talk with everyone, because it's not always about the fit. It's also like discussing ideas, etc. And sometimes you're just surprised with whom you match, because obviously they match themselves, they find each other, and sometimes there is setups that people wouldn't have expected before. So that's why I'm always, when people say, "Oh, I only talk with the 20 tech people or with the 30 whatever," I always say, "No, talk with everyone. You will be surprised what you will end up with." That's one thing. The second thing that we see is that, and I think that comes back to, so we strongly obviously invest in teams. We believe in teams, that's important. And what we see is that the teams that have a very strong domain expert, meaning someone that worked for 10, 15 years in a specific domain, and he knows a problem in and out, and he knows the pain point in and out. That actually shows us, like, and we see this with other Antler investments actually that are already a bit further, that these companies actually have a very high success rate, because there's people in there that really understand a problem. And that's always the start of a startup anyway, that you need to have that right problem that is big enough to be solved. Yeah.
So I assume that these guys who have a lot of domain expertise, they're more likely the ones to come with a sort of business in mind already. Is that an accurate statement?
Absolutely correct, yeah.
Okay. And so these guys are coming in and they're hunting already. They already know what they want to do, and they're looking for who's going to complement them in their business.
Yeah.
So that maybe they're terrible at sales or marketing or something like that.
That's normally what I hear.
Yeah?
Yes.
It is sales and marketing.
Yeah.
That's fascinating. What percentage of, let's say, the 80 would you say come in with, because you obviously need that as well, no idea what kind of business they want to build?
It's really, we have the bandwidth from no idea to idea. So it's almost like
full spectrum.
Yeah, I would say full spectrum. I would say maybe out of the 80, we have maybe 20 people that don't really know. I think everyone has some sort of direction or some sort of segment or some sort of like,
superpower that they know they can bring.
Yes. And I think that's also very important when we look at the team. So obviously we look at how great is a team with each other, skill set, vision, is this all aligned? How good are the individual founders? But we also look very much like how much does the team fit to the idea at the end when they pitch as well. And sometimes you have people that are like, okay, I did, I worked in insurance for like 15 years and I want to build a health tech company now, and you're like, okay, why? so we look also literally like, what do they bring to the table, and how could that fit at the end? So that's also a very important element, is like the fit of team versus to the topic. Yeah,
fascinating. So tell me a little bit about what you're finding, like what fascinates you in watching this. Like, as you're speaking, I'm like, I want to produce a show with you where I'm just going around following this, It's kind of like dating shows on Netflix, but this is like dating for building a business empire or a startup. What's shocking you about the process, or, you've already mentioned that the ones that are successful end up, meeting everyone and being very thorough in that way, also tend to have a business idea. So they're pretty, like, they have a straight arrow as soon as they come into the program. And then I'm also curious about these guys that come in, but they don't really have a focus. That seems like an odd, from an investor standpoint, like obviously your setup is slightly different, but from an investor standpoint, if someone just said, I want to be an entrepreneur, I want to run my own business, I heard that a lot at business school, and it just irks me.
Yeah.
How do you get in when you're more on that side? Or what type of personalities are you like, well, this is a successful version of someone who doesn't have an idea?
It's a very valid point. So in the interviews, for example, people that tell me I have no clue what I want to build, I'm always very, very cautious. Because I also believe you need to have some motivation on founding. Even you don't know your exact idea, but you need to have some sort of direction at least where you want to go, or like a field that interests you, something that, and even if it's like B2B versus B2C, or like there needs to be some sort of idea of what you want to do. The people that come in without idea, they definitely have some sort of, I would say, understanding which direction they want to go, but they don't have that specific idea. People that say, I have no clue, I don't know what I want to do, we don't find them. But people that say, I don't know what the idea is, but there's a direction, I think that's what we kind of see more. And we see that mostly on the tech side of things. So it's mostly the tech founders that have that. So it's when you think about our tech founders, so our tech founders are obviously not the ones that have like only 1 or 2 years working experience. It's people with like 10-year working experience. They led teams of 50 or 100 tech people. So really very experienced tech people that worked also mainly in startups. So when you think about the 80 people, in our last cohort, for example, almost 90% have worked at least in startups. And over half of the cohort were already founders before.
Oh, so they're second time or third time founders coming in.
Yes.
That's fascinating.
So when you look at the 80, there's a lot of startup experience there, either way, as I said, founded or worked in. And when you look at the tech people, there you see sometimes, okay, I worked in this startup, I was CTO in this startup, and now I want to build my own startup because I think I have a very different angle to things. This is the direction I want to go, but I don't know exactly the model. So that's what we normally see. And there was another point you mentioned of like, what do you see inside the cohort on behavior? I think what's interesting is it's not only the founders that meet everyone within the 3 days, but I think what I feel sometimes is missing is like the self-awareness. And I think the ones that really have a very good self-awareness of what they're good at and what they're not good at, and that can be a skill set but can also be on just on the personal level. This is very, very helpful if you have that kind of self-awareness to meet the right team and be very clear about your goals, etc. I think that are also the ones that are very successful.
Would you say the older ones are successful?
Depends. So our average work experience in the cohort is around 13 years. So that's not like a goal. It's literally the outcome variable here.
Yeah.
And we have founders that we invested in there in their end 20s. And there is obviously, I think that sweet spot is like in the 30s.
It is a sweet spot, isn't it?
And
it's like late 20s, you've accumulated enough experience and you're like, I think I can go at it alone, and you've got the energy and the gusto. And then early to late 30s, you're kind of like expertise domain, but this is kind of, it's not your last chance, but you're starting to feel like this is your last chance to put in a good decade of solid work to build a startup.
And I think sometimes it's also like an energy question. I think when you reach your 40s, and we have invested in people that are in older than 40 or in, I think, already 50. But that comes with a very specific energy and the willingness, because obviously the startup journey is a very, very hard one and a tough one. We try to prepare and put a lot of pressure in these 10 weeks to really kind of make sure that everyone is aware of what's coming in the next 6 to 8 years before they have the unicorn. But for the 30s are the sweet spot. The older ones are the ones with the domain expertise. But obviously the energy is a very, very important part in the whole thing.
Yeah, I was at business school a little bit on the later side, I would say, because a lot of the MBAs are, 26, 27, 28, and I think I was 31, 32. And so there was a time where I was raising a search fund. I don't know if you're familiar with them. Yeah. But basically these funds where you get investors to invest in you so that you can go out and buy a company, usually from people that are retiring, that don't have a succession plan, and so you can then take it to the next level. It's like a small, very, very small cap private equity play. And I remember, at the end of the day, I don't think it really mattered, but I was told by a few investors that I really trusted and, valued their opinion, that they said, hey, Erica, your age is going to be an issue because the majority of these search fund guys that are raising are in their early 20s. They also are mid 20s. And there's a difference in what you've been paid a salary and what they expect. And we just have to call a spade and just know, we will be judged for all of these things, and we have to manage that. Yeah. My other question that popped up when you mentioned that half of your cohort were already founders before. Then my next question, I think I've asked this to you before, is then why would they come? Because as a founder, unless you really just shot to the bed, as you'd say, and you went, oh God, I can't do this alone. I really need to find a co-founder. I could see that. But you should have contacts. You should have. Is it because they really were banging their heads against the wall and then realized that they needed to do it differently, or what are other motivations to join?
Antler is the best place to find a co-founder. That's the answer. And it's funny because the ones that have founded business before, a lot of stories that we hear why they come to Antler is because they had a bad experience with their founding team. And they underestimated how important it is to be aligned, to have the same vision. And people sometimes, when they, as I said, they have maybe 5-10 people they speak to, they go with an 85% solution. And at some point, this will not work if you want to build a unicorn. So the serial entrepreneurs that we see, they come because they know how painful it is if you don't have the right founding team. And that's why they see Antler as the best position. If you think about like per cohort, we have 6,000, 7,000 applications. We bring them down to 80. That means you're in a room with people, 80 people or 79 other people that were selected out of these 6,000 applications. You as a human, you can have built startups, etc., but you will never have that kind of network to meet these 80 people, interview them, work with them, try with them, pivot. We see people that try and fail and they start a new team within the 10 weeks. And you will not be able to do that with your own network, however big it is.
And is it required that, let's say someone comes in and they interview everyone and they just don't find the right person there, the right fit there. At the end of these 10 weeks, are they still working on their plan and going, I'm still going to try and pitch to Antler? Or for you guys, is it, if you don't find a team co-founder, then, you're sort of out?
Yeah. I always say this also before, or when we start the cohort, I always say not everyone will find a co-founder. At the end, it's 80. That's a lot of people, but still, it's math.
How many find a co-founder? Let's be real.
It's funny. So when we think about before IC, we have normally around 35 teams out of 80 people. So that's pretty much everyone.
Wow.
Yes.
Okay.
But also keep in mind, at the end, there's obviously teams forming that then maybe go with the 85% solution. And then we already know that team might not be the right one. But most founders find somehow a team. But there are founders that are great, that we love. They're amazing. And they just don't find that fit. And I also clearly say then as an advisor that if you really don't find that person, rather don't find that person in Antler. They have the chance to find someone maybe externally or whatever. We normally don't invest in sole founders because we just don't believe in the concept. I mean, if you look around how many unicorns exist that come from sole founders, you find almost none. And if we do this as an exception, because, for example, we had situations where there's a team and then one of the co-founders literally says, I don't want to continue a week before I see. So if there is an investment we make in a sole founder, we would only make that under the condition kind of knowing that person will relatively fast find someone or is already in conversations with other people. But if someone comes and says, I want to be a sole founder because I'm not interested in another founder, that's for us a clear no.
Interesting. And so your IC or your investment committee, I'm assuming this is when all of the pitches happen. That happens in week 8 of the 10?
No, in week 10.
It does happen in the week 10.
Yeah. So it happens at the end. So we normally, out of the 35 teams that we normally see, we allow around 20 teams to come to IC. So there's a few that will not make it to IC.
Already get filtered out.
Yeah.
Okay. And do you feel that, that's a pretty high participation rate in terms of finding team members? Do you feel like at the end there might be some people that are sort of jumping on board of an idea because it's sort of the best option in the room?
They try.
Yeah.
They try. But I think what's beautiful about our model at the end is that when you think about the 10-week residency, for Antler, this is the due diligence process. We're literally spending day and night with these founders. And that's also what we look for. When we have the 10 weeks, we want to see how fast are they building. We know they're smart. That's why they're there. We know they find maybe a co-founder, but we want to see how fast do they execute. What are they validating? How fast do they build? So when we kind of come to IC, we have already a lot of knowledge that we need to make that investment decision. It's not only the IC at the end. It's that 10-week residency where my team and me, and we have external venture partners that help us on the coaching that we give. The team's also pitching every week, by the way. So there's a lot of data points that we have before IC already or at IC that helps us to make our investment decisions so that we really test it. And I think that's something very wonderful is because obviously, as you mentioned, our investment is a pure team investment because there is no traction, there is no revenue at that time. So we only rely on the team, and that's why we want to make as many observations as possible. And I think that's why our due diligence process is actually extremely thorough because we do it literally for 10 weeks, spending a lot of time with these founders.
So let's talk a little bit about these good founding teams and what makes a bad founding team, because it is so pivotal. And I think so many investors at whatever stage, they are looking at founding teams. And something that you guys get a leg up on is that you have this laboratory where you're watching this day in and day out. What are some of the value systems or some of the characteristics that you can kind of pinpoint, say, when there's not alignment on these things, this is when the founding team falls apart?
So when teams come together, we have like the Antler 50 founder questions that they first of all need to ask each other before they even come to us and need to go through. And there's actually, funny enough, even though they know that we talk about these questions, sometimes they come with the 50 founder questions and we see already misalignment in the team before they even start validating their idea.
So they fill it out individually and you guys get a copy?
Yes. But they also can talk about it before.
Okay, so and they use it as a negotiation platform as well.
Maybe, and sometimes they come even and show that there's a difference, which is fair, right?
So give examples of a couple of these key questions here.
I think, funny enough, it comes down, and I think this is very interesting, why we do these questions. Because when you're a team that comes together, you talk about all the exciting things and the vision and how you want to change the world.
Yeah.
But have you talked about how many hours you want to spend per week, and how do you think about vacation, and when do you actually want to exit your company? And is $1 million, 10 or 100 or $500 million a lot of money? And it's sometimes these very simple questions that people avoid a little bit asking each other, and we're kind of put literally the finger and say, you need to go through these very clear and simple questions as well. That's where we see sometimes, or for example, founder salary is one of my favorites, where people say, okay, I'm raising $180,000 from Antler, and I want to spend $8,000 a month on my salaries.
Right.
That's also sometimes we see.
Interesting.
But when it comes to the teams where you mentioned where we are excited versus not so excited, there needs to be obviously a fit in the team when it comes to the skill set that they bring, and obviously the vision, the values that they have, that they know each other also on a personal base. We hope that they spend time outside of the court, almost like going evenings out and do whatever, to really make sure that there is an alignment as a team. So we look at all these things and we observe a lot. I think the teams that we see that work very well obviously are the teams that spend a lot of time with each other and really talk about everything in depth. We see this, like we have sometimes people like, I met the partner of and my partner, etc. So they go on that level even. That's not and I think that's very, very important.
I'm always curious about that. Like, this totally sounds like a dating program for entrepreneurs. This is where we're going to rebrand this.
Yeah.
But these are questions that we need to ask. I mean, every investor always says this too. Your business partner is just as strong a decision as who you're going to marry, if you want to get married, or who your life partner is going to be. It's going to be one of your life partners. And I think that's fascinating. You're right. How often do we ask each other, how many hours a week do we want to work? Even in romantically, right? These are big topics. Finances, how we want to spend our money, how much money we earn, how much we want to save, how much we put back into the family. And also, how many hours do we spend at work? How many hours do we want to spend together on dates? And it's very similar, like these critical pieces. And I'm so curious, at the end of these 10 weeks, when you think back to the more successful founding teams, is it visibly visible? Like, is it like
from day one, and then we knew it kind of before, or is it visible?
Like, is the camaraderie, the gel, they have the je ne sais quoi, this founding team knows each other, is in alignment? Is it obvious?
Yes, it is.
Yeah.
And especially for the ones where it's not aligned, I think we can smell that quite quickly.
Okay, the stink you can smell, and then the good from the great, is it obvious as well?
You can literally see when they also pitch, when they work with each other, like how smooth they work with each other. We're observing them. They need to validate the idea. They need to work relatively. They need to present a lot, and we can see how they work with each other. And I think this is where we can see. And I, as you know, like I built a few companies, so I also kind of look at things where I know where things can be painful, etc. So when we see that they execute fast, every week they come to coaching, we see, wow, like they move the world to kind of come to new knowledge and validation. And sometimes they also realize, this doesn't work, and they pivot in a different direction, right? And I think that comes back a little bit to the self-awareness, is that I think the most successful teams that we see, they have the self-awareness around what each individual is capable of doing. They're very real to themselves if they see things are not working, that they need to move in a different direction maybe. And I think it's very important when we invest also that we know, let's say that we invest in a team and the idea, I don't know, 3 months after our investment, something happens and it will not work out. We need to kind of be sure that this team will stick together and work on something different. And we see this. The great teams, if something even after Antler 6 months later on the idea, they realize it doesn't work as they planned, the great teams, they stay together and do something different. And we saw this in Antler a lot. And I think that's really the good value that the value that we see in this 10 weeks, that we see that glue, so that when something happens, because after 10 weeks, how far are you in a startup, that something happens to the topic or the idea or whatever, that they're still good enough as a team to continue. And I think that's very important.
Beautiful. Okay, let's go into a quick fire round here.
Okay.
I'm going to ask you the same questions I ask every investor that sits across from me. One is, to you right now, especially if you're coming up on these ICs and you reflect back on them, what makes a perfect pitch?
On point, and really that showing the excitement within a team for that topic. I need to see this passion for what they want to build. I think that's actually very, very important.
Yeah, it's a secret sauce, isn't it? It's not just the founding team that has to gel. It's the founding team and they're gelling to the topic. Yeah. And then it's the brainworks of the business plan itself as well, and ability to execute on that. Yeah. And you have to see all three. Okay. And I really want you to think about this one. What is your biggest pet peeve when it comes to these entrepreneurs making the pitch, or even maybe on these calls when you're actually interviewing them and evaluating them as a founder? What's the thing that just irks you? And you're like, I don't know why this keeps happening. Hopefully I'll say it here and then it'll never happen again.
Yeah. I think I heard it on some of your podcasts before. I think it was very similar, is when people come that actually interview with us, and we have actually an AMA session before Ask Me Anything where we explain, and they still don't really understand what Antler does.
Yeah.
And they just want to raise money, where I think you should do that, but like Antler, it will take you quite a long time. So it's really like not even after we explained what we do. That's why we have these online sessions, still not really knowing why we're interviewing them. I think that's one of the things.
Right.
And for me, the second thing, because that's almost everyone on your podcast said, so I want to find something else as well.
Yeah.
The second thing for me is a bit when people don't really know why they want to do something, for example, in the region. We have people that come obviously we have normally around 35, 37 nationalities in one cohort. And there's a lot of people that don't live in the region, but sometimes Really?
Can I just touch on that?
Yeah.
So your Dubai cohort of 80, how many would you say like actually were local, as in they lived here already, even if they were international? 60%. And 40% flew in for it?
Yes, maybe even more, but I think around that, yes. We have people from, as I said, like 35 nationalities.
They're like, I'm going to move to Dubai and I'm going to join Antler's program and I'm going to build my business in Dubai.
And all of these people that we obviously accept, they have amazing reasons why to be here. And there are amazing reasons why you should be here and build businesses. But there's also people that don't have good ideas why they should be here.
Interesting.
So I think that's one of the pet peeves when it comes to at least the interview phase. You should have that as well. Yeah.
Okay. And those 40% that are coming in from outside that do have a good idea, because obviously you guys a reason to do that. What are some of their reasons to come to Dubai?
So it's mainly two. Either way, you are interested in the market and you think something in that market is super exciting that you want to do that. Either way, it doesn't exist or exists somewhere else, or you think there's something in the market that could exist that doesn't exist anywhere else, but the market is right for that. I think we see more and more business models that were not just copied from another region and then kind of refined. We actually, I think, see also more and more ideas that fit very much to the region. And then the second reason is that people see different kind of government regulation, etc., that are, for example, Web3, etc., where you can build something here that you might not be able to build somewhere else. So I think the market or the market condition when it comes to building startups and what you can build, I think the UAE, so Saudi, are looking more and more into what could attract founders with topics that they can build very easily here that they could not build somewhere else. So that's kind of the second reason people say, wow, in the UAE, for example, I can build something that I can actually not build based on the regulation in Europe, for example, as easy. And that's why they come. That's kind of the second reason.
Interesting. And then in terms of advice that you do have for founders, and I want you to think back on your experience at Jumia, your experience at Daraz, thank you. And even your own business.
Yeah.
As they're thinking about, well, I think after they watch this episode, they'll be like, I need to make sure that I have the right founding team. And your business, actually, Smileo, you were the sole founder, right?
Yeah, that's correct, yes.
Yeah, and is that sort of feeding into your...
Yes. That's correct. That was not the best experience to be that as a sole founder.
To be fair, I would say being a sole founder, or sometimes there's multiple founders, but there's always one person that sort of carries the flag, true. And it is quite a lonely role.
It is.
Just as they say, it's lonely at the top to drive that. So completely understandable. But when with all of these experiences, and now you're sitting on the investor side, and there's a bunch of entrepreneurs, wannabe entrepreneurs out there, and some of them who already have a good idea, and they just don't know how to go about this fundraising process.
Yeah.
What's your advice for them in this climate?
So obviously, team is the most important thing. So I think you need to put that right team in place, and that's why Antler exists in the first place. If you have a great team, you feel very comfortable with the co-founders, then obviously I think the best, and you want to kind of either way do it bootstrapping, or you have some angels before you get to the real investors. I think it's important to build as fast traction as possible, and that's also, how can I say, the best founding team has, in my view, already everything to at least build for a couple of months, with or without money. It depends sometimes a bit on the business model, but a real great founder team has most of the time also a tech person that can build the tech, and maybe the whatever person that does the sales, or whatever is required in that business. But a good founding team has already everything that they need to build that first step. I think that's really the most important thing. And then the second thing is, let's say you have the founding team, you build kind of something with or without money. Fundraising is very, very tough. And I think sometimes we as investors on our side, we underestimate that. We believe that all the founders know all the investors, and why then they just send an email, or why they just apply. Yeah. It's not the reality. And I've been on the side, and only after I've been on the investor side, I see now how this whole thing works. And I think a lot of founders don't know. And I think we need to actually help them and educate them, and not underestimate how complex that actually is, and how you don't know all the angels, and you don't know even all the VCs, and obviously you can do your research and find that, but most of the founders don't know. And I think one of the things you should do as a founder is do your research, and trying to maybe go to your website and find out what kind of founders, investors actually exist. I think that's very important. Absolutely. And then very important is understanding what these investors investing in, at what kind of time, and also in what kind of topic, so that you already have that advantage, at least knowing that you're not contacting, a Series A investor to raise your pre-seed round, right? That would be, I think, a bit...
Yeah, for the startups registered on lucidityinsights.com, we kind of get privy to see which startups are pitching to which investors, and sometimes we look at them and we automatically know they shouldn't be pitching to this investor, and we'll have to write them an email if we have time to say, hey, do your research. As every investor across from us always says, do your research, know who you're going after, know why you're going after them, and why they would make a good fit.
And we have way more transparency now, who invests at what point of time, and what kind of investments or what kind of startups. And I think if you properly do your research, and then it's almost like a CRM that you need to, a sales funnel where you need to go through, and you need to talk with a lot of investors before you get some checks.
And just to be clear, so I know you guys write a $180,000 check at the end for just a few. If somebody else said, I don't want to go through the whole program, I already have my founding team, but here's, this wonderful man that I think could fit our business idea, could they come to you and say, hey, Jonathan, invest in us?
We don't do that because then we would kind of divert the whole focus.
Yeah.
Like our focus, like my team would then start reading business plans and Excel models and pitch decks, and we wouldn't focus on. We focus very clearly on the individual that wants to find a co-founder, and then sometimes we have some teams joining. So maybe 10% of the cohort are teams, but these are founders that are very, very early, meaning 3 months, 4 months, and they still want to validate their idea. Okay. So they're in the same cohort, in the same residency.
And they're coming with their
co-founder, yes.
A co-founder.
It's normally around 10 people out of the 80.
Okay.
Yeah.
And do they often find a third co-founder, or they just...
Sometimes, yes. They want to find sometimes a third, or sometimes they just want to stay the 2 or the 3. Depends a little bit, but they are very early and they still want to validate. They still want the coaching. Obviously, they also haven't raised at that time, so it's very, very early. Everything that's beyond like 6 months is normally too late for us, and normally these people raise them from angel investors.
Great. Jonathan, I really enjoyed this conversation. I always enjoy conversations with you. I think this is an absolutely needed model here. As you said, venture capital really raises, with, I would say, more experienced founders that have done it before often, or founders that have managed to find angel investors and cobble, their MVP together and get traction, especially in this climate. Yeah. There's no investments being made unless you've already got revenue and clients and customers. Yeah. And so for you guys to build this funnel at this front end, I think it's brilliant for you guys as well, to try and identify these unicorns from looking at personalities and people. Yeah. At the end of the day, businesses are a people business. So I think you guys are onto something, and I wish you the best of luck.
Thank you very much.
Your next cohort starts in Riyadh in October, and then the one in Dubai starts...
I think March, April. We need to see
April, 2BD for 2025.
Yeah.
Okay. Well, you heard it here, folks. If you guys feel inspired, we'll add your socials and all of the information into the notes. So thanks very much, and we'll see you again soon. Thanks, Jonathan.
Thank you very much.
Hey there. Thanks for joining this conversation. If you enjoyed that episode and you want to start researching potential investors for your startup's fundraising strategy, go to lucidity-insights.com and sign up now to the startup registration package by clicking the plans button on the top right corner. We look forward to having you join our future conversations and checking out our additional content. Until next time, stay hungry and stay humble.